Hi guys, and welcome back to ASX Market Watch. This week we'll be looking at the Australian Top 200. We'll be looking at the Dow Jones Industrial Average because those two kind of follow each other. They kind of work in tandem. Well, more likely the Australian market actually follows the Dow Jones to some degree. And this week we'll also be looking at the Materials and the Financials Index, just because those two markets are actually interrelated, and I want to show you how you can actually use that to make money in your own trading. And it's a fairly simple method to use as well, which is really good. It's kind of like economics 101, if you will. But yeah, this week the first one off the bat is the Australian Top 200. Now all I've done is drawn in my trend lines. These trend lines are extremely simple to use. Pretty much anyone can use them, but they're a great line in the sand for determining if the market will rise or if the market will fall. What I mean by that is the market crossed the downtrend line in July 2009, and we've had this great little bull run up since then. There was an earlier indication in April to May, but the solid signal was in July. And since then, we've had this beautiful uptrend line, and the market has actually bounced off that uptrend line quite a few times. It's found support at the uptrend line, which market will tend to do. Now, since then as well, we've had this little area up here where the market has crossed a smaller downtrend line, and also this little triangle pattern, which is a continuation pattern. It means the market will usually continue on in the same direction once it breaks out of this little pattern here, this little triangle. This tool is actually explained on ASXmarketwatch.com, but last week I indicated that there would be higher prices, and there has been higher prices. But what can we expect from here on in? Now, one thing I just really want to show you is that the market, we're coming up to a pretty crucial point here, and that is because the 5,000 level is pretty much right around. The 5,000 level here is the 50% retracement of the bear market from 2008 to 2009. So that is basically a huge resistance level for everyone, and we're pretty much right upon it at the moment. So even though we've broken out of the triangle, and that usually leads to higher prices, just be wary because we've got this 5,000 level here, and it could mean a little bit of resistance. If it's a bit of consolidation, I don't mind because I can hold the stocks if they're consolidating. I'm just not going to hold the stocks if they're falling. Now, where would be an indication that we would be entering some more downward movement or another bear market? That would be if it crossed this longer term uptrend line. So that would be around, at this stage, it would have to cross below the previous trough as well, so about 4,600. That would be my personal level for the market to pretty much get out of long stocks altogether. So I hope that's helped. The next one is the Dow Jones, a really simple one as well. The main point of focus on the Dow Jones here was the meeting of the longer term downtrend line and the longer term uptrend line, and that would usually find a little bit of consolidation, which the market has done. So the market's pretty much consolidating around the 10,500 level for the Dow Jones. Now, again, this is a pretty strong resistance point. If the market continues to rise out of this for the next week, then we could expect to see higher prices, but I'd be wary in keeping my stop loss below the previous trough and below the uptrend line. So an early indication of a bear market would be below 10,250 at the moment, which is quite tight, I know, but at least that's an early indication of a change in trend. So I hope that's helped at the Dow Jones. Basically, it's rising, and it would be considered to be falling or a bear market if it crossed below the 10,250 for myself at the moment. Now, the next two are the Materials Index and the Financials Index. The Materials Index, we look at sort of your resources, basically all your materials. It basically tracks the resources on the Australian market fairly tightly. And again, I've just done the simple tool of the downtrend line, which it crossed in March 2009, and now we've got our uptrend line. Now, the thing that I want to show you here is the overall market is rising, but this is the financials index here. As you can see, it's not as strong. It's only got, sure, it is in an uptrend, yes, but it's definitely not making new highs, whereas the materials index is definitely making new highs. So that tells me that this overall market bull run at the moment, this part of it is being fed by the resources in Australia. So that says that the resources is basically the strongest sector for myself to be in. The last thing is that the resources tends to be the last stage of a cycle. So if the resources part is booming now, which it is, this tells me that it's the last stage of this little bull run up from March 2009. Now, a lot of people are calling an end to this bull run, but we'll only know that it is happening for certain, because we can only speculate, but we'll know that it's happening for certain when the materials index starts to fall. At this stage, it's still going gangbusters, and there's still a lot of gains to be made in the resources sector at the moment, which is really great. So I hope that has helped you guys. Please drop by the website, asxmarketwatch.com, if you feel so inclined. There's lots of tools, and there's even a free course on there on a lot of ways to enter and exit the market, and ways to be a bit safer with your money in the share market and lose less and hopefully gain more as well. And we'll also be doing these weekly chart watches just so that you can keep on top of the market and where it might be heading, just like today. So thank you so much for stopping by as well. It's really great to have you, and I hope to see you next week. Until then, happy trading. Bye now.